European shares advance as Trump is elected. Welcome to Market Insight, I'm Ramzan Karmali. European shares jumped, tracking the mood on Wall Street as Donald Trump was elected US president and Republicans took control of at least one chamber of Congress. The euro is set for its biggest one-day fall against the dollar since 2016. And Eurozone bond yields also fell. Well, to help us look at what a Trump presidency will mean for the markets going forward, I'm joined by Janet Moy, Head of Market Analysis at RBC Brewin Dolphin. Janet, thanks so much for joining us. So in terms of the result, it looks like a pretty clear-cut victory for Trump. The market reaction suggests this was the most ideal scenario for investors, but is it?
Yeah, I think the market so far is reacting what it should be with a Trump victory and a quite high likelihood of a red sweep, in fact. I think the initial thoughts is that Trump is proposing tax cuts, which is great for American corporates, right? And he also proposes deregulation, which is great for financials, for example. So I think overall speaking, at least I think for investors, a lot of us just want the election to get out of the way. And now we have a clear-cut result. I think that's encouraging. At least we get a bit of certainty in the near term. I think the worst case for a lot of investors would have been, very tight race, prolonged wait and potentially contest the election. So that scenario is gone away. But I do think that the market reaction, it has been quite acute for today. Maybe getting a little bit ahead of itself. We still don't have the result for the House of Representatives, for example. So there's still uncertainty on how much of those tax cuts or stimulus plans can go in full, for example. But I think in general, that's lifting some of the uncertainty that we had for pretty much the past couple of months.
Now, it looks like European equity markets may have come off their highs they hit earlier in the day. Why do you think this pullback's happened?
Yeah, I think in general, investors are worried about trade tariffs because I think it's clear that Trump has won the White House and he has a lot of leverage on foreign policy, as we know. So I think Europe is considered a double whammy of potential trade tariff policy because Europe runs a huge trade surplus with the US, so obviously would be targeted. And Europe is very exposed to China as well. And we know that China is going to be a huge target for the US. So economically speaking, Europe very exposed to China. So that is kind of a double whammy. You got the direct hit and the indirect secondary impacts from the China weakness as well. So I think investors are just worried about that. And of course, there are other concerns such as the relationship between the EU and the US. How is that going to go? And also other, multilateral relationships that could be put at risk. So I think investors are just worried about that. And we have seen the euro is off about 2% versus the dollar, which is very significant.
Now, you talked there about tariffs. Could the impact be so significant that the ECB may be forced to cut rates faster in order to stimulate growth?
I think that is likely. Investors already have expected ECB to be more dovish than, say, the Bank of England and the Federal Reserve. I think the growth profile of Europe has already been quite weak. You have the largest economy, like Germany, very, very exposed to trade tariffs, and its auto sector is clearly suffering. And you got other economies like France that, again, the growth trajectory is not great. There's still some political uncertainty. So I think in general, it does give the ECB more reasons to cut interest rates as long as inflation continues to be muted, which is so far it has been the case. It's more muted than the other advanced economy, for example.
We're looking ahead tomorrow. We get interest rate decisions not only from the Bank of England, but the Fed as well. What are you expecting here?
Well, investors are still expecting 25 basis cut from both the Federal Reserve and the Bank of England. I think in the very near term, the election probably won't make too much of a difference to how central banks think about the immediate policy impact, because what we know is inflation is heading in the right direction. The UK latest inflation figure is below 2%, which paves the way for the Bank of England to act. But I think in the medium term, there will be question mark on how much they could cut interest rate. I think the general sense is that we won't be getting as many rate cuts as previously penciled in.
Now, in all of this today, in the reaction to the election, we also had Europe's largest company reporting results, Novo Nordisk. What did you make of what they had to say?
the most important point is that there's still lots of demand for these weight loss drugs, and there are many variations that is coming into development. I think there's just insatiable demand, and the good thing is that Novo Nordisk is very confident they can meet those demand, because I think a lot of the investors' concern is that they're not increasing the supply capacity fast enough. But I think today there is clear guidance that the supply is going to increase, whereas there are also variations of these weight loss drugs coming into the market and into testing phase and things like that. So I think longer term outlook remains quite bullish, and I think the stock prices have fallen by over 20% over the past couple of months. And I think valuations got attractive, so investors are pulled back into this stock again.
Janet Moy from RBC Brewin Dolphin, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.